Matthew Stych is Research Manager at Planet Retail and joins us now. So, down 6% first half full sales. I'm just wondering, do these figures tell us more about home retail, or do they actually tell us more about the climate that everybody's in?
Well, I think a bit of both. It's extremely difficult for electronics retailers, as we've seen right now. And I think Argos in particular is suffering in categories like the big-ticket electronics items, like the big TVs, for
because
example.
A, people aren't going out and buying them, and
Exactly.
B, I suppose, you know, you can go to the likes of big Sainsbury's, big Tesco's and get them online.
You can. I think online is providing the sort of biggest competition right now. Even the big grocery retailers aren't doing particularly successful, aren't trading particularly successfully in their electronics items right now. So it's the online that's providing the biggest threat, I think.
Now, we know home retail is one of the least preferred stocks at Citigroup. I'm just wondering how the two branches of Argos and Homebase are comparing right now.
Well, I think in many ways the home improvement, the Homebase arm of the business is doing better than Argos. To a certain extent, home improvement is suffering from, yes, not really sort of putting off the whole sort of bathroom refit, the whole kitchen refit. But to a certain extent, the sort of home improvement is ticking over with the smaller ticket items. And Homebase has done a lot of good work around differentiating itself from rivals such as B&Q. We've also seen Focus drop out of the market, so it's picking up a bit of slack on that front. So not doing quite as badly as Argos.
It's very interesting, isn't it, the strategy of this company, because you've got the likes of Argos, and then I think there's an Argos on every street corner in major towns in Britain. But the management very keen to say, no, we're not cutting stores, we're not going to do anything like that. So I'm interested in what you think about that sort of strategy, and whether actually some of these stores and some of this share price, which is actually pretty low, could actually start to becoming quite a nice little takeover target.
Absolutely. I mean, I think with regard to the store base, I think it's a very bold strategy from the management. But in a way, it kind of tallies with their strategy to be a multi-channel retailer, and that's really where retail is going. So, you know, reserving online, paying online, and collecting in stores. So in that sense, it's really well set up with its store network, but obviously that's weighing heavily on its cost base.
And of course, you mentioned online, and we've been talking about just how that is really becoming the future. It's not just doing your business online, it's doing your business online well. That's the key, and there are real differences in how companies approach that.
Yes, and I think Argos is certainly not among the worst in terms of its online offering. It's had a multi-channel offering for a number of years now, something that other retailers are only just getting into. It's also got an excellent mobile application, which is another growth area of retail. So Argos is doing many things really well. So it's difficult to sort of say Argos should be doing one thing rather than the other. Perhaps, as I say, there are too many electronic stores around on the high street right now, and that might be an area they have to look into.
Okay, we shall leave it there. Matthew Stych, Research Manager at Planet Retail, thank you very much indeed.